Heidi ho, everyone, and welcome aboard. It is Thursday's edition of Trading Buddies, and I'm so glad that you can, thank you, Marlon, can be part of the show. And of course, being our Trading Buddies. Don't forget, as our Trading Buddies, please participate. If you've got something that you would like clarified that we do or don't do, or you'd like to have our opinion on a chart, by all means, get into the chat box. If you want to come on camera even, only too happy to oblige. This is your show after all. Pinch and a punch, by the way, first day of the month, right? And for me, that means the first day of spring, which means very, very, very busy in the bamboo nursery, I can assure you. And I've only just sat down after a very, very long day in, I've got to say, cold and wet conditions. Anyway, that's nothing to do with trading. Well, it has really, because it's kept me away from the chart. So I'm really catching up. So let's have a look, see at pound versus the US dollar. Nice one yesterday. I happened to be in front of the charts at the right time, and we got that nicely to our take profit level, which was 2.5 times our risk. And that's always nice. Tuesday was a no entry. I think the entry was pretty much there when we, I'll just double check that if we've got time later, but I think it was right on our entry, so there was no trade. I thought that was going to be the case here today as well, but it looks like we've had a little bit of a rally. It's a tight range, I must say, and the range is from the top of that bar, which is the candle that opens Tokyo, and the low of the very next bar, and that amounted to, let me see, 30 pips, I think. Yep, 30 pips. So therefore, our entry becomes 1.1583. How close are we? I'll just put it in just in case. If price comes back, we don't want to know about it. Don't want to know about it if we're right on entry. That doesn't make any sense at all to me, because it can just go 1 pip either way and you're in and out. At least this way we've got a nice direction finder, if you like. And if price goes long, who cares? If we're trading short, if it goes long from here rather. If it goes long from here, that's not a great thing. But we're looking at a short at the moment because we are above the center line, which is our entry point. And that's the way we trade this. If we're above the center line when London opens, we trade short. If we're below the center line when London opens, we trade long. Look, I haven't found a sweet spot that says, okay, how close to that entry point is a good idea. In fact, I have no idea what that is at this point. And that's why this is really still testing, as always, guys, until we say, okay, this is working and working well. Please treat it as such. It's just a test. But I must say, I got a little bit of cash yesterday, which is good because I'm out of balance this week. I've got a couple of trades that are in drawdown at the moment, but we'll go through those in a tick as well. All right, 59. Let's put this into action. It will be a short, and we'll be entering at 1.1583, as I said. No risk at all on this, right? Not break a bar, 1.1583, right? Yep. Now the stop loss is where the top of the range is, and that's at 1.1598. 1.1598. That's our stop loss. We'll get rid of whoa. Too late, she cried. I'll just see if that does go back above here. If it does, fine. It'll have to go back above the open rather, for me to get interested in placing this now, because it's already gone through our entry. 1.1598, get rid of the take profit pips, and our TP1. TP1 is 1.1568. 1.1568, and we don't take anything off the table at that point. We just move our stops to entry. Okay, like I said, I won't place this order unless price now goes back above the open of that bar. And that may be the wrong thing to do, but that's kind of how I roll. So hopefully not the wrong thing, but I like to keep a very, very strong handle on my cash. And in general terms, I like to see price go in the opposite direction before I enter the market. And at this point, that is not the case. Like I said, that may be the wrong move, but we can take note of that. And if that is the case, then maybe we need to change the rule, or my rule. We could be here forever waiting for that. Well, you know what I mean. Not forever. I should send an alert, shouldn't I? I won't do that. I will briefly move on, however, because this will be just boring as batshit watching it. About SH1T, my apologies. So let's go and have a look at the news as is at the moment. Aussie Swissy I got into on Tuesday, and as quick as I got into it, overnight I woke up and we were in drawdown. That is still the case, and we haven't got much left in this before we hit our stop loss. Don't really like the shape of this anymore, but there's really nothing to be done. I can definitely see a broadening pattern here, and that would suggest to me that we are now on the way down. I thought we had enough space once we got above this high to get a take profit one. Not yet the case, and it is looking quite forlorn at the moment. Our only protection are the pivots, really. We've got the monthly pivot, which is good, and the weekly pivot, which is good. Mind you, the monthly pivot is what, not even 12 hours old. So I don't know how much credence you can put in it. It is still keeping us in the game for now by the look of it. We'll see how we go with that down the track. Second lot of bad news, and probably even worse than that, because I had more cash on it, was Aussie Kiwi short. Now, I placed this morning, and potentially too early for this to be, certainly to be a lower high, because it's not. But what it is a game changer bar here. So key reversal bar followed by an inside bar. And that is always something that I take note of. What I should add to that is that we do need a clear directional bias and a primary. Doesn't have to be the trend, but it just has to be a primary chart pattern. And really, I think you can toss up whether the dominant, or what I now call the boss copy, is indeed this head and shoulders, which really has kept the market down, or this double bottom. And you could argue for the double bottom, really, I suppose, at the moment, because trending up. But that level that I keep harping on about is, well, in this case, it's 112.18. But I keep harping on that every time Aussie Kiwi gets above $1.10, I want to sell it. Well, it just keeps staying there and won't go down. But when I got the signal on the daily chart that said, okay, game changer bar, inside bar, I felt that it was pretty cool to play that. Thus far, that's not such a great idea. We'll see how it pans out. Maybe the weekly pivot can propel us back down into profit and towards the monthly pivot. The good news is that I placed an order this morning. Was it this morning or yesterday? Can't remember. Yesterday on the Aussie 200. And that's so far given us a first take profit, which is cool. But it hasn't made up for those two drawdowns at this point. Well, certainly if those both go to stop loss, this won't make up the difference unless it gets way down to here. And that quite on the cards. I don't have a problem with that. I'm more than happy to be in an index short, I've got to say. I'm less than happy that last week, was it last week, I got into gold. Yeah, got into gold and look at it. Oh my God, I moved my stop loss to entry too early and I missed out on all of that gold short. Makes a cowboy want to kick his horse, doesn't it? Really. But in the future, we trust, I suppose. I'm getting a good handle on these asset classes, so that's probably the good thing. I'm learning how to trade them where I've never traded them before, so I'm now getting the idea of how they roll, which is cool. So although I've missed all of that, sadly, it does give me some experience, right? So that's all that counts. Righto. So we're now above entry on this pound US dollar. So I will place the order. And the order was ready to go. Yep. Okay. So it's a sell. There we go. So we're selling there, as I said, at 1.1583. First take profit, which is a bit of a misnomer because all we'll do is move our stops to entry. If we hit it, is 1.1568. Stop loss, 1.1598. Righto, that is pretty much me up to date, I think. There's a stack of game changer bars yesterday, but one only today, and blow me down, it's euro dollar. Holy snap and duck quack. How can I justify trading the euro long? That is the question. Well, the way I can do that is by getting a good handle on what the dollar index is doing, which is a flip-flop version of the euro dollar anyway, but it's got a little bit more, in my opinion, information surrounding it. And like I said, I think a couple of weeks ago, as soon as we hit this level, we're going to potentially consolidate, and that's exactly what's happening here with the dollar. The news is toing and froing it, of course, but not to a large degree. It's still a strong resistance level, and I find it more probable than not, that until there's another major announcement, and I'm not sure where that comes from at the moment, but we are in the first week of the month. I don't know if we've got NFP tomorrow or NFEC. Maybe we have. I haven't got a Forex factory in front of me, but Ash will bring me up to date on that. So it's still about where the dollar goes right now, but the euro's had a strong couple of days, I've got to say, and against the dollar, even has come back above parity, of course, barely. What happens next? Have we got a pattern that suits us in terms of tradability? Answer for me, nah, sorry. I can't trade this long at the moment. There's just no chart that will get me interested, I don't think. 4 hour looks more like a false break of resistance to me than anything else at the moment. Yes, we have a triple bottom. Yes, we probably have a higher low, but that's as good as I've got at the moment, I think. I want to see, I don't know, a false break of support really for this pair before I'd consider trading it long. Today we have, or do we have, an untested daily pivot by the look of it. 30-minute chart will tell me. Incorrect. It's actually been blown apart, hasn't been retested. So yeah, tough for me to think long this pair at the moment. and for that reason, I'll be staying out. That's kind of where I'm at. I will have a look at some game changer bars a bit later if we've got time, but I want to bring Ash in. G'day, bud.
Hi, mate. How is things?
Oh, I'm absolutely, let me put a transmissible word on it, or transmittable word. I'm okay, but I'm really tired.
Yeah.
Really tired. Been very busy today. It's springtime now here in Aussie. Pinching a punch, by the way, mate.
Oh yeah, but right back at you. I know you're not really allowed to do that, but right back at you, mate. Interesting, mate.
I've been very busy in the nursery, but that's to be expected.
Yeah.
I'm sore.
I think just interesting what you're saying about gold, mate. Actually, hi, Paul. Interesting what you're saying about gold. Just quite impressive the way you're picking out the gold stuff. And
mate, I'm shattered that I got out of it. Absolutely.
Yeah.
Shattered.
Well, that's a few really good moves that you've been on top of there. And the gold chart and the situation with gold obviously linked to the dollar. The dollar is doing very, very well right now, and actually interesting, isn't it? Because the dollar has been doing well, but it seems a little bit frozen at its top end.
It just couldn't push through that recent high, could it? Yet,
no,
anyway.
and I wonder whether it will. I mean, when I'm sort of like looking around at some of these numbers, they are starting to look very, very bleak, and it's a tough situation. The Australian economy is faltering. We're starting to see some faltering also from the United States, and we know what's going on in the United Kingdom and Europe as well. And China looks like China's going into further lockdown. So not a positive picture. And you have to start wondering whether the stuff that the Fed are saying will. I mean, we have this perception that Jerome Powell would reverse his decision. Now, he wasn't willing to do that at Jackson Hole. His speech really was based on the fact that there was going to be no reversal of sentiment from the Fed's perspective. But the question really has to be, can they really hold firm with the economies starting to, genuinely crumble? And I wonder whether we are more likely to get a situation where they will have to force us to live with the inflationary environment just to get some growth back into the market. Because maybe not 10%. We're starting to see inflation that is way too high. So maybe that's too high. But maybe there'll be a situation where they say, look, we're not going to get it beyond 6. So we're not going to relate. We're not going to start raising interest rates continuously here, because they are going to break the economy, quite quickly and very badly. I mean, there was a talk of a soft landing. Is that soft landing possible? Maybe, but they haven't really sort of managed to shift the labor market at all. The labor market right across the board. You go to pretty much any nation, and the labor market is very, very good. And one way that the Fed are looking to attack the inflation data is with the labor market. Well, they haven't been able to do that as yet. But I wonder whether if they see just a little bit of a glint of hope, that they might say, actually, a 0.75 basis point interest rate rise is not going to happen. Maybe we are going to sort of like now start shifting down to 50, maybe even 25, because they really are in danger of damaging economic growth significantly. We aren't just looking at one nation here. We're looking right across the board. Numbers from the Globe this morning, starting to see manufacturing data from China under the 50 mark, so down at 49.5. So again, showing some relatively bearish recessionary a recessionary data point. But then we got retail sales from Germany that were 1.9%. So consumer bubbling along okay. from that particular number. Switzerland are seeing CPI data coming at 0.3% month on month, so a little bit more inflation in that nation, and retail sales at 2.6%. So that particular nation might not be quite as bad as everybody else. They're still bad. Some of the other numbers aren't particularly good, but that, you know, Switzerland might be a place that you sort of think, well, you know, some money parked there wouldn't be such a bad thing. Australia looks in trouble. You know, it has to be said.
Yeah.
You know, considering we've got this, you know, this is a commodity-based country, and with China starting to sink, we're starting to see construction numbers from Australia in terrible shape. Housing data, so building starts in Australia in terrible shape as well. So the Aussie still looks weak now. As you know, mate, I was looking for Aussie CAD for a short. Now that thing hasn't really moved.
It hasn't done anything, has it?
No, if we go and have a look at that, actually, let's see, Aussie CAD.
Yeah, I've been watching it like a hawk, and because, as you know, I think if it gets above this bar here, it's got a strong chance of rally. But as you say, it's just done nothing this week at all.
No, it really hasn't. It's very much back and forth, and this was last week's kind of, you know, cotton seasonal data would suggest that we see an Aussie CAD short, and I'm sticking in there with it, mate. One thing that is possible when I look at the chart is that, and it's not a very clean number here, but if we look at this here, I mean, that's sort of like one thing that keeps holding, that particular line keeps holding. There's another trend line up there, but the one that I'm most interested in is the formation of this this inverted head and shoulders here, and I wonder whether we need to get to this area before we start to see some downside on the Aussie CAD, technically speaking, because as I say, it keeps holding. There was this little head and shoulders pattern kind of forming down here. Well, the right shoulder is starting to get a little bit longer than the left, so that pattern is starting to just iron itself out. So the bigger picture really is for this inverted head and shoulders, and this is a great place to pick up the inverted head and shoulders, you know, for a long, when we look at it, it's there. But you still got the neckline to get through, and I wonder whether that might be the sweet spot to try the short on with this one. The Aussie dollar tends to kind of start September well and then just tail off at the end. So not the best currency throughout September. So I wonder whether a little rally might induce some selling. But as you say, if that's to happen, it's going to be taking this area out here. And I don't know whether that would hold, you know, that well with the analysis that it would stop at the neckline. But it may, you know, we might see a burst to the upside and then a stop at the neckline and then some downside in the Aussie. So I am looking still at Aussie CAD for a short. But again, as you quite rightly said on Sunday, do you really want to trade the CAD when the situation with oil is starting to improve on supply? And therefore get negative on the price, because we've got Iran coming back into the market. We've got China in a situation of contraction. So that would suggest that you know, the demand for oil is just starting to sink a little bit. We're getting this global recessionary problem now. So again, oil starts to sink a little bit. A few sort of signals that suggest that the inventories are growing and then slumping and then growing and then slumping. But this week we got a little bit of growth with WTI. So the CAD doesn't look all that attractive. Let's just bring in WTI and have a look at that. But that doesn't
it's kind of one that's in trouble versus the other, which is maybe not so good at the moment. But the real clincher for me was that left shoulder of the weekly chart is on a very, very strong support level. If you have a look, if you draw a horizontal across the left shoulder, of the it's pretty strong level, that.
Yeah, it is a strong level. You're absolutely right. Yeah, it is very strong, isn't it?
And it looks like a false break of that level to me. And that was why I thought, you know, if it got above that seller bar, it's got a few prospects. But it's got to get there, you know?
I think you're absolutely right, mate. And you know, this is, you know, I showed everybody this last week, and this is what's drawing me really to an Aussie CAD short. and it's this this COT data. These are the COT data on the Aussie CADs. Let me just straighten this out. I don't like dates that are on the side, but here we go. So so this is the COT data, and we can see sort of like from last week again, sort of like just a little bit of weakness, not extreme to be fair. So just a little bit of weakness there. But then if you do go and have a look at the CAD, very strong. The data for the year so far would suggest that there is a lot of strength here for the CAD. Now, I'm not quite so sure why that's building in the way that it is, but with the situation with oil. But there is speculation that that the CAD would rally. And
I think everything else with the Canadian economy is bubbling along quite well, though, isn't it? So I'm a massive fan of the CAD, to be honest. I think it's probably the number one once the US dollar starts to crumble. At the moment, anyway, in my view, that's going to benefit from that. Let me put it that way. Aussie's not far behind, but as you say, right now, the Aussie's not looking too flash.
Yeah, I mean, one thing about Canada is that the trade that it's doing is still pretty good. I mean, we're still talking about WTI right up at $90 a barrel, so it's in pretty good shape still. It's not like it hasn't collapsed. It's just come down a lot. So relative to where we were, the CAD has sunk down a little bit. On some of the data points, but trade balances are still very, very good with the CAD. There are some sort of PMI. There is some PMI data which does suggest some contraction. So it really is a global issue with some of these data points that are sinking down. As I say, that the Swissy isn't too bad either. Trade balances again, sort of like from Switzerland, positive, and you start to see numbers that we got again today. Retail sales up 2.6% from 0.9%. Sorry, that wasn't from 0.9%. That's a 0.9%.
You're saying everything I don't want to hear, Ash. I'm long Aussie Swiss.
Well, I mean, let's have a look at the Aussie Swiss, but it's just actually, I'm just going to have a look at the COT data.
It looks in trouble now.
It does
look in trouble.
Let's have a look at the Swissy on the COT and see what that is saying. Where are you? There we go. Yeah, building, mate. It is building. So actually, yeah, the numbers are suggesting that I mean, particularly the Euro Swiss on COT data would be the two that are going in the opposite direction. So you'd probably edge towards that, but you can see that even though still negative, it's most bullish for the year. So Swissy actually is shaping up pretty well when it comes down to COT data at least, and the numbers are looking all right as well. From Switzerland. If we sort of have a look at well, let's have a look at this very, very briefly. But this is what I was referencing, is that you've got numbers here just this morning. I mean, as I say, numbers right across the board from Switzerland are okay. And OK is very, very good right now when you consider some of the other nations.
Yes, true.
But CBI data at 0.3%, so another bit of growth there. Retail sales at 2.6% from 0.7. So looks like the consumer's doing okay over in Switzerland. So it seems relatively buoyant. This number is going to be interesting, manufacturing PMIs, but the trade balances have been good, from Switzerland. So the fundamentals are pointing to a nation that is doing better than most others. The Euro's rally is an interesting one, when we sort of like look at what the price action's sort of saying about the market right now. The euro, the rally in the euro seems very speculative and more about the carry than anything else. If we have a look at the Let's have a look at the Aussie Swiss, because that you know,
I can't fall in love with the rally, I'm afraid.
Me neither. No. And we look at the Euro Swiss. Yeah, I mean, it's decent moves to the upside on Euro Swiss. I don't know how far this goes, and you know, well, there we go. We got right on the monthly pivot. I'm not sure whether that's from last month, but sorry, weekly pivot. Is that a weekly pivot?
Pretty typical of what you see when you see a short covering rally, though.
Yeah, I totally agree, mate. Totally agree. It you know, the euro is the one to sell, and when you look at the price action, really what you want is something. Just give us something, just to give us sort of a better price than we've got right now on the euro, because the you know, on the euro with any crosses, because it's been so badly beaten up. You're going to want a better price on this before you get in on the long side. We've got the euro CAS.
But you see all those sharp rallies off the bottom.
Yeah,
it end up as selling opportunities, basically.
Yes, yes. And they should, you know, again, though, as you know, you're talking about strong levels. The low from 2015 or 2014, is it 2015? So the low from 2015 is currently holding, and the speculation that,
which of course is a significant low.
Yes,
because that was the Euro Swissy decoupling.
Yes. Yes, it is a significant low, and with the European Union, the European Central Bank looking like they're getting more hawkish, because they haven't really got any choice, then buying the euro is an obvious answer. But I would have thought, and maybe this is the thing with the euro, you know, the euro is a short. I would say no doubt about it, but I would have thought that as soon as we've got the ECB press conference done, then the euro is going short again, because the speculation I would suspect would be, well, they're not going to go again, you know, anytime soon, because they just can't. And you know, this is the case right across the board. Actually, Canada have got some their rate statement coming out on the 7th of September, so we may well see that the Canadian dollar rally in the next few days first, as those numbers start to filter through. And again, I would have thought this particular nation, and this is what we're trying to do right now, look at the nations that have got enough to suggest that they can go with a rate hike and hold it. The ECB probably can't go with a rate hike and hold it. You know, they're economically, they are crippled. They're doing really, really badly. Canada, less so, doing some deals in the United Kingdom on oil recently, you know, sort of like to provide some energy. So you know, that's just kind of one example. Trade balance is doing pretty well. Some numbers looking a little bit tepid, but not extremely weak. You would suggest that the Canadian economy is probably one that will do okay, and probably will be able to raise interest rates and hold them. Maybe not extremely high, but they can probably go again with an interest rate rise. Forecast at 3.25%. So there is a forecast of a 75 basis points rate hike with Canada as well. And as I say, I think one nation that could probably get away with that. And then on the 8th is when we get the European Union's, the ECB's monetary policy statement. So this week, 7 days, I not this week, but you know, over the next 7 days, things start to get interesting, because I think that even though we might start to see the euro at minimum hold, I would have thought after that statement, you know, after they raise their rate, the statement afterwards would probably be a bit more dovish, I would have thought. You know, I'm not sure whether they're going to be quite as aggressive as Powell and the like. And you know, the reason that we're seeing the you know, the sinking of everything else is because Jerome Powell has been very very dovish recently, just a bit more so. Gold break through down here in your opinion, mate? I think it probably. Yeah, it's not looking good, is it,
mate? All I can say is it's approaching support. If it gets through that, and you know, that was always going to be the level, in my opinion. If it got through that, which is really effectively, it's the neckline.
Yeah.
If it gets through that level, look out. But right now,
Yeah.
It's
In
you
a
know,
bit of trouble.
if you're not in right now, it'd be tough to enter right now, I believe.
Yeah.
You're so close to that support.
And it's amazing, mate. What a difference a week makes. Look at the FTSE 100 as well. It just sinking to the downside, unable to kind of get any. I mean, look at it. It's just an obliteration of all those moves to the upside. I think there's a hold probably due around about here, so we might well have another 25, 30 pips to the downside. But after that, it looks like the FTSE is possibly going to hold and start to ease its way back up again. It's just the way that the market has been over the last year. I mean, this is the start of the year. That's where the year started, and straight away we're sort of like we're right on top of it, right in it. A big move to the downside if you go from top to bottom, right way from this point here to this point here, which is around about a 6% move. So a 6% move to kick us off, and going back up again. So we're looking around about a 7% move to take us back up again, and then this huge move to the downside, which was a like 12-15% move. So the same sort of like going back up again, and it hasn't really eased up. We've seen 1, 2, 3, 4, 5, 6, 7, 8, 9. Now it's the 10th huge move that we've seen on the FTSE 100. I mean, if you kind of caught the top and the bottom of this market, then you're probably looking at 100% of your account just trading the FTSE at levels of support and resistance. Not saying that that's possible to do, but it's been a very unusual market if you compare it to the previous year, which generally speaking is just kind of like floating in one direction. It starts down here, ends up here. So you buy down here, you hold up here, which is tends to be the strategy for indices. Not the case this year. It's actually below the start of the year now. The FTSE 100. That's the first bar of the year. So we're down on the FTSE, but to say to somebody we're down on the FTSE, they would probably just expect it just to be drifting, but it hasn't drifted at all. There's been extreme confidence, just to absolute panic, and we are really in that panic phase now. I still wonder with the FTSE whether we kind of look at the highs here, whether there's a chance that we get back up to these levels before
Which chart's that one,
before
mate?
really. This is the monthly.
Monthly, right?
Yeah, but it's on the futures. So,
g'day, Lewis. How you doing, bud? When you're done with that chart, if you have a look at the S&P 500 weekly, it is such a good trend that it's starting or has formed now. It's amazing.
Yeah.
Wow. Look at that.
And we talked about the S&P.
Strong downside, man.
Yeah, talked about the S&P and sort of like getting to this particular level, but look how it touched it by literally. It was by by the dollar. It touches this particular level and just fails. Not quite. We got maybe sort of like $5 or $6 before it's getting there, but it literally got to that point. Everybody got out, and it has just reacted off a off a very, very strong technical level and just collapsed.
Yep.
So yeah, lots of concern and lots of trouble, mate. I still wonder whether with the S&P that we might be getting ready for a hold down at this particular point here, and then maybe shooting to the upside, because this is why the market has been so unusual. There's been no ranges pretty much. Well, there's this massive range, but really there's been no sort of like holding points. It's just kind of move to the downside, move to the upside, move to the downside, move to the upside, move to the downside, move to the upside, with these sort of like daily period trends sort of like going in between. So it's been a brilliant market. It has to be said for trading. It's been a very generous market.
Absolutely.
For trading.
I mean, that's what I was saying with the S&P.
Yeah.
I mean, that's so tradable.
Yeah. Yeah. So it really is. Lewis is saying gold touched the 1680 again from the double bottom. Let's have a look at that.
Yeah, it's the same level we were just talking about.
Oh yeah, seeing this low, yeah. You would think
What
so.
if it gets through
what's-
there, Lewis? What if we get a monthly close below that level, mate? Look out.
Yeah, it does seem to be that the speculation is promoting buying in the market, and the facts are promoting selling at the minute, which of course is the way around. You have to speculate if you're going to get in early enough, but the problem is speculators now have been caught completely off guard.
But you look at that chart, right? Since the high, that's just gone to perfect trend.
Pretty much, mate. Yeah, pretty much. Yeah, coming down, coming up again, coming down. Yeah, it really has. I mean, that level particularly was very, very good that we saw a couple of weeks ago. Very, very good point to try and sell this one off. So
yes, Lewis, that level is absolutely crucial.
Yeah.
Because the trend continues if it gets through there, and it's the neckline of the double top. So,
Yeah. Yeah, that's in a bit of trouble. What's silver doing? Silver's also down. Silver,
down,
I thought
down. Buy more silver.
Yeah, well, it certainly looks that way, doesn't it? I mean, I thought silver would have a decent chance of holding this zone here, and it still may, but if it breaks that down, but you see, obviously, silver being an industrial metal as well as the precious metal aspect of it, the story's not so good for silver. Now, I wonder whether we come down here now. No, COT data, in fact, that looks like a better line there. We're right on top of that particular area. So on a technical basis, you would expect, some silver to hold out here. And it might be one that we edge towards. If we are going to be getting bearish on the dollar, maybe silver's a decent one to edge towards. And we got to bring the dollar in, while talking about all this stuff, because what I find really interesting about the dollar is the lack of ability to get through this particular zone here. You look at this on a daily chart. The dollar really is looking pretty good under this. This is 110. So I wonder whether 110 would provide us with one more kind of like blowout to the top, and then start to sink down.
Well, again, it's been since the turn of the century, we've only been at this level once.
Yeah.
Everything else has been underneath there. Everything else. So, to get through this level is not going to be an easy thing to do from a technical perspective. No,
it really isn't. But we do need to hear some dovish comments, coming from the central bank. This is the Nasdaq, and again, the Nasdaq is looking very ominous. And when you consider the situation after COVID, there was no way this was coming back. This was going to the moon and never going to return. And now the Nasdaq looks in all sorts of trouble, and you wonder where the buying might start coming back in. I mean, this is the breakout from COVID at 9,000. And it got all the way up to near 17. It nearly doubled in the course of a year. The Nasdaq. I mean, the move really was more reflective of a bearish move. The gains that were made were so parabolic. I mean, this thing just really has just gone in a crazy way towards the end there. So you're almost looking like a bell chart. It feels like this will come down to these points, settle down, and we can start again. But
again, like we said at the time, this does not happen. Prices, charts just do not go up, 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 up. So you're going to have to respect what's going to happen next, and it's happening, right? If you have a look at the daily chart. And I go back to this because I am so impressed now with, and I don't know why I didn't do this years ago, with following these indices. They are just so technical, it's not funny.
Yeah.
You bring a trend line down from the highs, right down from the highest high. Look at that.
Yeah.
That's,
Well, we
that's
talked
one of
about
my,
this as well, didn't we, mate? We were saying if
we
this
did,
gets through here, you know,
and test that level.
yeah, there's your entry there, right?
100%. Yep.
Yeah. Yeah, head and shoulders pattern, and yeah, no, it absolutely has. It really has reacted to. Well, of course, you know, when we're sort of like considering this stuff, the robots run this now. You know, we're not looking at kind of human involvement quite so much. So where are the robots going to buy? I mean, that's really sort of like the big job. And I'll tell you what else is interesting, mate. We probably don't talk enough about trend lines, because most of the things, I mean, you do when your approach is sort of like all based on trend lines, but this just really does illustrate the importance of trend lines and the importance of understanding trend lines, because even though there are horizontal levels along here as well, that was nowhere near as accurate as this. Nowhere near.
That's right.
You look at the S&P. Look how accurate that was. And again, you know, you have got a horizontal level along here, but look where it is. It's kind of beneath it. And actually, you could sort of like draw this and sort of say, well, it's probably actually somewhere in this hole here. So very, very difficult to get exactly where it is. It's probably around there is the strongest. And yet it's still pipped through it, you know, by what are we looking at? About 30 pips to that. And yet we're looking at no more than 10 pips to the trend line. So the importance of these trend lines I think are just screaming that, you know, their way, which why this one looks interesting. You know, this trend line down here looks interesting. That's going to be like down at around about 38. Looks like around about 38.80 right now. So and of course, you know, it's matching a horizontal level, which is what we want. We don't just want a trend line. It's much better when it matches a horizontal level. There's kind of this other one here as well. You know, and it's not that you know, anybody would say as soon as I draw a trend line, that's where it is. It's just that these trend lines are sort of, you know, integral things to kind of have on your chart when you're trying to decipher some of the cleanest areas to get involved in. So yeah, I think these are, you know, important for everybody to start practicing, really putting these trend lines.
Yeah, a lot of pro traders say they don't use them, but if that's the case, how come they're doing exactly as you're pointing out? How come that is the case? Because there's big money turning the markets at those trend lines, right?
Yeah.
It's not your money and my money that's turning the market at those points. So if the pro traders or even the institutional traders or the robots aren't seeing those levels, I'm a monkey's uncle.
Yeah.
Maybe I am.
Maybe.
Stop it. I was shaving my beard off. Don't look like an 18. Well, maybe I do. That's for other people to decide, I guess.
Yeah.
But yeah, look, you don't need to convince me on trend lines, that's for sure. Because that's primarily what I use. So I agree with you. You know, if you can, you don't have to use them.
Yeah.
If you use them as a tool, another layer, gee, you'll find it. They help. They really help. No,
I agree, man. And you know, this is why with the Aussie CAD, while I look at the Aussie CAD, I've kind of put this one on the shelf. You know, who knows when the fundamentals, and when it comes down to the fundamentals, the cotton, the seasonals don't really give us a timing tool. They just give us something sort of like quite general. And the general message is that we should be looking for long CAD, particularly against the euro, but also the Aussie is a similar thing. And interestingly, the Aussie does tend to have a decent first half of the month, but overall is negative. So we might well see the Aussie rally for a couple of weeks off the back of the seasonals. But I look at this trend line and think, well, you know, my sort of timing would suggest that if this gets touched, then I'm interested in the short from there. You know, so I need I need sort of more than just the big picture to be lined up. The big picture does suggest some selling from the Australian dollar, but then we go down to the technicals and we try and find a place to get in for that. Now, this area is dangerous, as you pointed out, because of the horizontal level across here. But this area wouldn't be so dangerous. It's got some room to come down again and maybe, yes, rally off the back of it. But that would be first port of call for me. Looking at this one, that would be the second port of call for me. Now, I kind of want to see I'd want to see a horizontal level there as well. But if it kind of matched some of these horizontal levels when it came up there, that'd be a second time to go short, as long as the fundamentals and the COT still match the sentiment, that is, of course. Yes, you're right, Lewis. The strength of the CAD could be underpinned by the lowering of the oil price. And if we think about, you know, what's coming in the next few months is winter in Europe. So there's every chance that that's when we start to see Russia play silly buggers again, and then we start to see a rally in oil because the supply is kind of coming back out of the market again. So I think oil's got another rally in it. You know, not good for the Ftse, it has to be said. You know, the Ftse's suffering greatly because of what's happening with the price of oil.
Yeah, because you've got all those the big oil companies, right?
Yeah, well, BP and Shell.
The Ftse,
yeah, BP and Shell are both huge companies. I mean, actually, BP this morning is pretty flat. Shell down at just over 0.5%. But yes, I mean that doesn't help. But it's the mining stocks that are really driving the Ftse. Glencore's down 5.5% this morning. Anglo America down 2.5% this morning. And Rio Tinto down 2.5% this morning. It's the mining stocks that are dragging the Ftse lower at the minute. And again, global growth. If you want to sort of see an index that is closely aligned to the business cycle, have a look at the Ftse 100, which is why it's such a great hedge trade. You know, if the globe is starting to weaken, then sell the Ftse and you know, potentially buy the Nasdaq, but even though that can be a little bit dangerous. But certainly on the flip of that, if the globe is strengthening, then you can definitely buy the Nasdaq and sell the Ftse. But you're really looking at the makeup of what is providing growth, and the lack of desire for mining materials right now inevitably is pushing the Ftse 100 lower. And you can rely on tech just a little bit more in this current environment. So it's an interesting approach actually to sort of like do the spread trade if you can pick those things right. But as I say, mate, Ftse in all sorts of trouble this morning, and until we start to see some growth coming back into the market and into the data, the Ftse is likely to continue to slump. And it's that index more than any of the others that needs central banks to start coming and saying, look, we know we've got to get on top of this interest rate stuff, but we're starting to choke things too quickly. And we're going to just curb our stance back a little bit and maybe go at 0.5s and 0.25 just to help you guys along a little bit.
What's your take on global growth, right? Has slowed like crazy.
Yeah.
If we attribute that even in part to lack of supply or freight, all those things that are involved, do we now think, and it seems reasonable for me to consider, that global economies are going to shrink and stay shrunk for, don't know how long, but I would imagine quite some time, because it makes now perfect sense, and in particular with US dollar non-reserve currency. Let me just go easy on that, but I believe it will happen. But that aside, it makes perfect sense for countries who do have resources, if you like, certainly at the moment, with the uncertainty around maybe the reserve. I said I wouldn't say that. Let me just go with it makes sense for, let's say, Australia, for instance, who've got a lot of resources, a lot of natural resources, and were once a very, very strong manufacturing country, but have not been for so long now, because they've outsourced all their manufacturing, a lot of it to China. So China keep putting tariffs on Australian goods, right? Because they've got the poo-poos over one thing or another that the previous Prime Minister said, or blah, 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 blah. Australia, if they stood in their own 2 feet more than they do now, in other words, if they manufactured goods more than they do right now, which is negative even compared to what it used to be, if they were to do that, I think their economy would be far better off. And I think outside the emerging economies, like China and like a lot of the Asia Pacific area at the moment, who are globally emerging, so that's not going to be so good for them. But I think Trump, he was singing the same story, and I think the world is starting to catch on to that just a little bit now, because if they can keep their supply chain, if it's within the same country, it makes perfect sense not to import from, say, China, which goes through Singapore, and you've got 10,000 ships sitting in Singapore harbour waiting to be loaded or unloaded. To me, that kind of makes far more sense and should free up the supply chain for those countries who do have their own resources. Obviously, there aren't too many of them, but if that was to be the case, and I'm going about this a very long way, I think it would make perfect sense for Australia, Canada, New Zealand, to not rely so much on imported manufactured goods, even to the point where Australia no longer manufacture cars. Can you believe? Yeah. So all of that's now imported in parts, right? So they import.
Yeah, well, I mean, I guess there was a tipping point. I think with the likes of Australia and the United Kingdom, exactly the same. There was a tip. There's been this tipping point where they outsourced a lot of the work to other nations that they wouldn't have to pay quite so much, mainly because of the labour cost. Yeah, but there's a tipping point because inevitably those countries eventually become developed economies, and when they become developed economies, then their costs go up. But then it's for the likes of Australia to go and find a new manufacturer, to go and do a deal somewhere else. Because if they've got a nation that is willing to consume, and the consumer, we always hear about how important the consumer is, in particularly the United States. How important the consumer is to putting coffers in the vaults for governments so they can continue to grow their economy. They will need to go and find a new supplier. Now, of course, with China's power in the globe right now, and how it's managed to kind of like get itself up and with its feet very much under the table, then the negotiations are starting to take a slightly different tone, because how do you take that away when they could hurt your economy in a significant way, as you're talking about with tariffs and all sorts of things like that? Because they are now, as I say, they're a developed economy, so they're in a completely different in a completely different space, and the tipping point is probably tipped. So the likes of Australia, the United Kingdom, and America, and Europe. And you can see that with what's going on with Russia, they probably should have moved a bit earlier. They probably should have tried to find a different client a little bit earlier, because they've really played into the hands of nations that, to be fair, would be absolutely fine to do so if they had some kind of cultural similarity to, but they don't really. the United States and China are on completely different pages on so many key issues that you would think that they would sort of have probably seen that, seen that sort of like in the first instance, but maybe the arrogance and the hubris that they kind of end up showing means that they didn't take that into account significantly enough. And now they've got this problem where you've effectively, from their perspective, created a monster. And it means that goods and services are now tied into political, wranglings and everything else, because it is about give and take, and inevitably nations will grow. A big nation comes in and goes, I'll tell you what, no different to a small manufacturer getting a big contract with Apple. The likes of Nvidia and ARM and all these paid people, Apple comes to them and say, make our chips for us. Then those small companies, because they're making the best chips on the cheapest level, will grow. They do become sort of like much, much bigger companies. They still need that contract to continue their
they do, and that contract tends to get less and less in their favor, I can assure you.
Yes, it does. Yes, it does. But then you got, those companies can then start to diversify themselves. They can start to outsource themselves. They can step into not just chip making, but they can step into making their own systems altogether. What is their end game? Do they really want to just remain as a chip maker, or do they want to sort of like play it with the big boys? And if you think about what's going on with China doesn't just want to stay this nation which is manufacturing for the globe. It wants to become the main player. It wants to be the one that's outsourcing themselves and starting to see their citizens becoming kind of first world citizens as well, and running the globe, having major decisions.
Actually, there's some interesting developments from a security and military perspective going on in the Pacific right now, which affects Australia big time. Australia was the go-to defense buddy, if you like, I'll put it that way, of the Solomon Islands. And the Solomon Islands have just signed, if there's such a thing as a contract, with China, who are now taking that role. And just in the last 24, 48 hours, I've heard that Australian ships have been banned from entering the Solomon Islands harbours or waters. If that's true, WTF? How does that happen?
As I say, I would, absolutely right. I mean, there's things going on all over the place. The UN have come out and said that they do believe that what China have been doing, I can't remember the atrocities that but there's some illegalities from China, the torture. Sorry, so that I can't pronounce it that well without probably offending people, but there are the torture claims against China Uigurs, is it?
I don't know.
But the European Union, the UN are coming out and saying it's credible. So China have got their enemies globally, on some kind of scale. It's got its enemies. Russia and China sort of like in cahoots together have got their enemies. They don't want the West kind of like stepping into certain factions. And this is the point, is that all of a sudden you've got this nation that was basically manufacturing for the world becoming a major player and saying, actually, we want more land, and we're going to go and get that land because we've got some decent military power and strength now, because we've been getting paid for the last 20 to 30 years by people that wanted to get us to do the work for them. So they start to overtake America, and this is the way that kind of free markets work. You're an American company, and you can get your goods manufactured so much cheaper in a different part of the world at just the same quality. What are you going to do? So you can and then come back and make a better top line for your family. and you can't really shut the world down. I mean, you could shut it down, but there are going to be a lot of people at the bottom yet again.
That's right, who suffer.
Yeah, they're the ones that suffer. The ones at the top, won't suffer anywhere near as much. The likes of Apple are doing fantastically well by outsourcing to China, but they probably could afford to use some of the Western nations, just not be quite as big a company. But I don't know how big you need to be. I'm sure they'd still be in the trillions if they outsourced it to the United Kingdom or even sort of like parts of the States as well. But this is the inevitable thing about growth, and this is why no one nation remains the superpower forever. The amount of times the baton has been handed on. We had the Roman Empire at one point, then we had the British Empire at another point. As they kind of hand the baton on to the next and the next and the next, it just doesn't remain. It can't remain. I mean, the United States is potentially going to pass it on to China. They may well pass it on to India. They might come back to another nation at another point.
Did you watch that Ray Dalio thing I posted there a few weeks ago?
I think I saw this.
Deals exactly with that subject.
Right.
Great. It's a very good production, actually.
Yeah.
So yes, it's all about the rise and fall of empires and how we're bang on that doorstep right now.
Yes. Yeah. Makes all the sense, mate. And when it comes down to trading, this is it leads us to understand that we need to keep our ear on the ground for global developments. Really, we got to understand, and this isn't unrelated. This isn't just a kind of news flash. This is related because global developments matter, as we saw when Trump was in power. As he's rubbing the Chinese up the wrong way, we saw equities just tank. And the reason for that, of course, is that if there are business tariffs going on between China and America, it means that businesses are not making quite the same profits because all of a sudden their margins are squeezed. So this stuff does matter.
100% it matters. That's why we're talking about it, obviously.
Yeah.
All right. To trade it right now, I think I'm happy to be short the Aussie 200. I'm not so happy to be long Aussie Swissy. I've got to say that, but Aussie Kiwi, I've been singing it from the trees for a long time. Got the opportunity to trade it, and it's in drawdowns. What can I say? Not a lot. We'll see how that finishes up. Yes, Lewis, Australia used to make the Holden car. In fact, there was one of our anthems is football, meat pies, kangaroos, and Holden cars. It's actually a song. The problem is that the world has been so heavily relied on China manufacturing, so it seems hard for other countries to start. Look, it's impossible for some countries, Lewis, for sure, because they don't have the resources and they don't have the wealth of economy that on the surface, pardon me, Australia has. But, pardon again, because of what we've just been through in the past 2.5 years, I don't think there's a country on the planet that hasn't got a massive amount of sovereign debt. Australia is in that boat for sure, with $1 trillion in debt. Never, ever, ever been anywhere near that in its lifetime. America has gone from what used to be, I think, 1 trillion in 2008, and I've got no idea what it is now, but it's in the tens of trillions. It's just out of control, the debt, and this is what's going to bring everything unstuck eventually, because what they're now doing and what they're trying to do is print money to get out of debt. That's never going to happen. That's just chasing your tail. In fact, it's worse than that. It's biting your tail, because you'll never catch it. I mean, one of the first things I learned as a child was don't borrow what you can't pay back. And what they've done is they've borrowed so heavily, and they keep borrowing and keep borrowing and keep borrowing, and when interest rates go to 5-6%, what happens then?
Yeah.
It just gets worse and worse and worse and worse. So they'll print more money to pay the piper. 20 plus trillion, yeah.
It will flip. Anyway, mate, let's wrap it up because we are sort of beyond the hour, and I've got somebody to come in and fit me a new boiler today. I'm without hot water again.
Oh no, it's a pain.
I can just so it's okay though. I've just heard them at the door, so I'm
all right. Happy days.
Yeah. But yeah, a fascinating discussion, mate, and you know we kind of know that that this stuff is going to turn around. Just before we do go, I think there is probably a long trade on the Ftse 100. I wouldn't be after too much here, but it looks like a little potential long trade up to this area here. It's not the monthly pivot because that's now up here, but I think there is I think there's just a little bit of upside on its way here. So yeah, it might be a difficult one to get in. Maybe we'll wait on this one, mate. But I think, you know, look out for Ftse longs, probably 15s. Yeah, there's a little 1-to-1 probably here. You have to be sharp to get into it. But I'm looking out for Ftse longs because even though, you know, the market has been slapped up a little bit, I think there's probably some upside on its way at some point. Looks like that could be a potential target just there, maybe back to these highs here. So you'd want to enter on a little dip down to here, and that would be a Ftse long for me up to these this 72.50 level.
Cool. I'm starting to get handle on these other ones. I'll have to concentrate on the Ftse when I've got them right, mate.
Yeah, when you feel comfortable.
Yeah. Okay, very quickly, I'll go through a couple of things and then we'll get out of here.
All right, mate. I'm just going to go and see the boiler guys, and I'll be back.
Oh, all right. Happy days. Rightio, just really a wrap of where I see things at the moment. We'll start with Aussie Swissy. Looks in trouble. It does look in trouble, no question. And what Ash has spoken about and what I now see on the charts as a potential for this to go here, doesn't look good for the long that I'm currently in. I've got the weekly pivot, the monthly pivot protecting me only. That's the only thing I've got going for me here. I'll hang on to it. It's too late to do anything about it. I thought that Aussie Kiwi, which I've been trying to get short on for donkey's ages, would be a potential hedge on that. It's actually turned out to be entirely the opposite, and at the moment is in drawdown as well. We do have the weekly pivot protecting that, and that strong level there, right there. It may be up here though, so that one's in a bit of bother. I don't think there's anything that I want to do here, frankly. I still see my one. Have I already got 3 breaks? I think I might have. Yeah, not really. I'm waiting for this to be the third, so this will be the third Amigo, but it hasn't played out yet. So I may be early on this. I may well be early on this, and if so, I'll pay.
Sorry, but I'm gonna have to go. So
yeah, go, mate.
I wish you guys good weekend, and I'll speak to you all next week.
Have a great weekend, mate. Catch ya. Okay, as I was saying, Lewis, you're going to run too. You're welcome, mate. Have a good one. Aussie Kiwi, we went to. I went through this earlier, of course. Aussie 200. Look, I'm full of confidence with this, to be honest. But I'm going to keep a stop loss. I'm learning. Going to keep my stop loss where it is for now. This can only be a winning trade. Of course, we've taken profit at TP1, but if we can get down to here, that'll be a nice trade. The euro today. Now, I think we've lost our edge in that. Yes, we have. Look, it's so reliable, isn't it, really? break and retest. What happens from here? Yeah, as I said before, I can't get enamored by the long. I just can't. I need to see a false break of support before I can trade along here. So what happens here? Back underneath here. Maybe don't take out that low. Then climbs back above, retest the level. Then I can go long. But I've got to see a false break of support, which really means that the market's not ready to go short, right? And if that's the case, then VEX doesn't happen. Y generally will. So that's what I need to see to get long the euro. And that will be the same on every euro pair, because I just don't trust the euro at the moment. If you can get in to, I think, any of the indices off a rally, I think that's very, very good counsel at the moment as well. It doesn't matter what it is, frankly, in my humble opinion. Any rally on the Nasdaq would be fine. Any rally on the S&P 500 would be fine, but respect your support levels. Of course, you've got to take profit there if you manage to get into those trades. Everything else, I think, is a little bit iffy. I'm looking forward to next week, frankly, this being the first day of the month. Everyone's keen to get in the market. I get that. But I don't see too many opportunities outside of what I've already said. And maybe I'm on the wrong side of the Aussie. We'll see. If the Aussie crashes, maybe the Aussie 200 does as well, and I get some money back. All right, guys. Of course, if it crashes against the Kiwi, I'm happy chappy. That is it. Thank you for being our trading buddies, as always, and we look forward to your company again on Monday, when we will do it all again. Any of those trades that I'm in, if you're a member of the Telegram group, I will update in need. If not, it's just business as usual. We'll just keep them as they are. Have a great weekend, everyone.